Hey everyone, John Henry here, slingshotfutures.com. Today we're going to be going over what is limit up and limit down. Now, limit up and limit down is something that you may or may not have been able to witness before, right? It doesn't happen that often. But really what limit up or limit down is basically just a maximum amount of percentage or value that a commodity contract can go up or down. Now, they do have variations of this, which we're going to be going over in a different video, that are different halts, and that usually occurs more on the stock side of things. But when we're talking about commodity futures contracts, this is the limit price, that a maximum limit price by which the price of a commodities futures contract may decline or increase in one trading day. Now, limit down in this example also refers to the maximum decline permitted in an individual stock or certain exchange before trading curbs kick in. So really, when we look at a few different things, the price limit guide from the CME group, right, the primary exchange for most commodity futures, when we're talking about the U.S. equity indexes and different markets, they'll all have different types of limits. So looking at the CME website here, we can see that the CME Group U.S. Equity Index price limits is 7%, 13%, and 20%. And what that means is, if it were to fall 7%, the market would halt. And when it halts, no trading there's nothing you can do, right? It's halted at that specific level until it reaches a specific amount of time that it's been resting on that level where they will widen out the limits to then go to 13% and then 20%. So there's a pause, right? There's a floor that's put in, or a ceiling that's put in, that disallows the market from falling like crazy. You can't go into a free fall in the U.S. index markets because they have limit down. So you'll see something like the S&P where it'll go flying down 7% and then it just bottoms out, right? It stops. There's nothing going on. You can see the bid versus the ask going all kinds of crazy because, well, the only thing you can do there is buy, right? If it's all the way down 7%, you can't sell anymore because nobody's willing to give it to you. So the only thing you can really do is buy down there, which pretty much nobody is going to ever do, because usually when the limit down opens back up again, it's going to be down a big chunk of percent. And sometimes, in rare occasions, we've seen something like the S&P go down, limit down, pause there on that limit down level, and then open up and then immediately go limit down again. That does happen sometimes, and that's why you don't really want to buy into a limit down, because you're just setting yourself up for a really bad time. But that's what limit up and limit down is. It's basically just a floor and a ceiling. Usually more people are watching them for the floor side of things, because more people really care when the markets go absolutely bonkers to the downside. But limit up, limit down, that is the idea. It basically disallows that huge amount of movement that can make the markets go crazy. Now, how do we know what the limit up, limit down is, right? What 7% from what? The closing price at 5 o'clock, or is it the closing price at 4:15? Right? It can be really confusing. So if you go to the CME Group website, cmegroup.com/trading/equity index/price-limit-guide.html, this website right here, what this will do is it will tell you all of them and the date that they're effective for. So in this case, today is the 27th of the year. So if we look at this, we can see all of the different ones that we want to find. So if we're looking for the equities as an example, and we want to find the S&P 500, let's find the S&P 500 futures. There we go. So we have the S&P 500 futures, and right there you'll be able to find your limit up, limit down prices. Now all of these are right here. So 7% is the first column here, 13% is the second column, and 20% is the third. So if you're looking for a specific price, let's just say we were trading this one. I'm not really going to pay too much attention to the month or anything like that. It's more for example. But here we can see that 7% down would be 229,750, and then below that 214,950, and then below that 197,650. So those are the limit prices of the specific markets, but that can sometimes be helpful and sometimes not. You know, what if the market that you're looking for, especially when you're talking about the S&P, you know, the small cap, or is it this one, or is it the growth fund, or is it this one? It can be a little bit confusing. So another way to do this, and although it doesn't give you the exact prices, but another way to do this would be looking at barchart.com. Now, barchart.com has a very, very useful ability of showing you all of the contract specs and the base amount of up versus down. So if we go in here and we look at soybeans, We look at soybeans, and we go into the contract specifications right there in the bottom left. Contract specifications, we'll click on that. And what that's going to do is it's going to give us a breakdown of what everything about this contract is. Everything from the bar chart symbol, ZS, the exchange symbol, ZS, the name, the exchange it trades on, etc. But it's also going to give us a daily limit, right? So the daily limit is 75 cents per bushel, right? So 75 cents per bushel and expanded to $1.15. Again, remember, when you have a limit scenario, the market will go down, it will hit limit, and will stay there until they expand it out, or it bounces off and, you know, goes back up again, which doesn't generally happen very frequently on the first limit down. Usually happens on the second or third. But when you have that type of scenario, what will happen is when they expand it out, that's the expanded level, right? Remember 7%, 13, 20. They might be different based on the market, but that's what they mean by expanded limit. So the daily limit by default on soybeans is 75 cents a bushel, and they expand it out to $1.15. This is very, very useful because now, essentially, you know exactly what you're looking for. You may not know the exact price that they went off of for the close, but generally speaking, you can see it right up there in the top left, right? It's pretty obvious right there. This is nowhere near up or down 7% or so, and it's nowhere even close to 75 cents. So because of that, we already know, hey, not that big of a deal. It's not something I have to worry about. Let's look at something else like crude oil, right? So crude oil, if we go into the contract specs, we'll look at the contract specs here. And here again, we can see all of the basic information. Symbol is CL, Crude Oil West Texas Instruments, trades on the NYMEX, trades in 1 cent increments, $10 per contract. So a lot of useful information in here. But the daily limit right there, $10 per barrel. Right? $10 per barrel. That is the limit. You'll notice there is no expansion. So once it hits that, which, by the way, $10 move on crude oil, real tough to get. But if it hits it, it's done. It's not going anywhere. It's the only way it's going is off of that, or it's going to stay at that level until the close, where things can get a little bit nasty, and you got to wait until the next day and all that fun stuff. So the daily limit, again, the reason why I like using bar chart is because it makes it so much easier. I can look at it and say, okay, well, I know exactly how much up or down this is. The limit is $10. It's only moved 65 cents. Not even close, right? So nothing that I have to worry about. And generally speaking, to be fair, you almost never have to worry about, you really ever have to worry about limit or limit up or down. More often than not, if you're an agricultural trader, trading on the soybeans and those types of markets, you will run into limit up, limit down scenarios more frequently. But for the bigger, broader markets, crude oil and the S&P and the NASDAQ, they do not go limit up, limit down very frequently. So looking at the last time the markets hit a limit down, this was on the S&P 500. That was on November 9, 2016. Now that was likely written on November 9th for November 8th, so keep that in mind. But in 2016, this was when President Trump won the elections. That caused a huge amount of market volatility, and as we can see, the S&P futures at one point were down, limit down, off by over 100 points at their worst. So that goes to show you that it doesn't happen very often. I'm recording this at the end of 2018, so that basically means it's been, a good 2 years plus some months that we've seen a limit down on the major markets. Again, on the soybeans and the agricultural markets, you'll see them happen a little bit more frequently, but still, even then, maybe once a year, if that. So very infrequent will you see these, but it is good to know what they are in the event that they do happen, so you know what's going on and why it looks really weird, why there's 700, or 7,000 on the bid and only 2 on the ask, and the markets just aren't moving for some reason. That might be why. You might be sitting on a limit down scenario. So that's going to be going over limit up, limit down. Hopefully you found it useful, interesting, entertaining at the very least, and maybe something just to kind of keep in the back of your head on those days where the markets just seem like they've got the gas pedal to the floor. That might be a good idea to keep in mind where those limits are. And if you're really far away from them, not a big deal. You don't have to worry about it. But if it starts creeping up on it, you might want to know where those levels are so you don't get stuck on the wrong side of things. That's going to do it for this one. As always, I hope you had a phenomenal trading day. And underneath the video, click on the thumbs up button to show us that you like the content. Of course, subscribe to the channel so you don't miss any of the video releases. And to make sure that you don't miss them, click the notification bell icon to the right of that. Ring the bell so that you know every time one of these videos comes out so you don't miss anything important. Until the next time, we'll see y'all then. Thanks.